only record something which has a monetary value, which I can express in number. If there's no number, there's nothing to record. She is beautiful. He is handsome. Can I record it? I cannot, because I got nothing to record. But if I bought a computer, if I pay, if I receive money, I can record because there is a number. Yeah, so again, that's what monetary is. Now the next one is going concern. Of course, I am doing accounting because I am expecting my business to continue to operate. If I know my business is not going to continue to operate, I should stop. Don't waste your time and don't waste my time. Close the bloody company. Don't waste your time. Okay, so we need to always look at the business as a going concern. And finally is separate entity. That means owner and business must be separated. Don't keep them together. If it's your personal expense, don't show it as a company expense. Yeah? So you need to know how to differentiate between the business and the owner. Is this clear or not clear? Are these clear or not clear?
Yes.
Okay, good. Alright, so now we come to the meats and bolts, the most important part of this topic, and we start with some basic math. Okay, so to simplify, I just say you need to know this for the rest of your life. A equal L plus E, where A is asset, L is your liability, and E is equity. So this is the universal formula of all accountants all over the world, Vietnam included. So everything in your accounting reports follow this standard equation. So if you know A equal L plus E, if I give you A and L, you can easily give me E. If I give you L and E, you can easily give me A. If I give you A and E, you can easily give me L. Why? Because they are all interrelated and through a formula. You understand? But you need to know, the only thing you need to know, I'm going to get a red color here. The only thing that you need to know that is different is you need to know what the hell is an asset, what the hell is a liability, and what the hell is an equity. Then your equation will match your knowledge. You understand what I mean? You need to know what is an asset, what is a liability, and what is an equity. So this represents an underlying framework. Yeah, underlying framework means everybody use this as a basis for their accounts or accounting information. So another way to look at it is whatever the asset the business owns will be owed to either your creditors or suppliers, or will be owed to the owners. Okay, that means another way to look at it is whatever asset the business owns will be owed to either lenders or suppliers or owners. That means everything the business is owning belongs to somebody else. Yeah, it either belongs to supplier and lenders or it belongs to the owner. And you've got to make sure that concept is very clear. Now let's assume, okay, let's assume your asset is 100, your liability is 150. What does it mean? What is this then?
Minus 50.
Now, when this is minus, it simply means the owner has lost all the money they put into the business. And we don't want that. When E is minus, the business is better dead than alive. No, forget. Don't waste waste your time anymore. It's a what-I situation. Don't waste your time anymore. So whatever we do, E must always be positive. If E is negative, stop. Don't do. Don't waste your time. So you see what I mean? Everything is simple and logical. E is minus means your business is in trouble. You understand what I mean? So we always want E to be positive. So if this is 50, it's very good. Then this is plus. Okay, that means whatever the asset owned by the business, 50 belongs to others and 50 belongs to the owner. It's a good situation. Okay, so this is the kind of thing you need to look for. That's why you see the last point here. If I liquidate, let's say my business is really going down. So I decide to sell all my assets. Alright? This is the book value. I decide to sell it all. And maybe because I'm selling it urgently, I might get 80. I might get 80. So from the 80 that I collect, I must pay them back 50. So what will be left for the owner?
30.
30. So how much did the owner lose?
20.
20. You see what I mean? So when we have a liquidation, the owner always gets money last. Yeah? Owner always gets the money last. Lender and supplier and staff must be paid first. It makes sense. It makes sense. Imagine the company goes down. The first people they need to pay is the staff. After they pay the staff, they must pay the suppliers, and then they pay the lenders, and then if there's anything left, okay, I pay the owner. If there's nothing left, that's too bad. Owner has to go with nothing. You understand me? So there is some risk to being a owner. So please remember this equation. Alright? So this slide tells you what are some examples of assets. Again, it's in your slide deck. This slide gives you examples of what are liabilities, and the next slide tells you what then will be owner's equity. So the only difference is equity is slightly expanded, where E is actually equal to C minus D plus R minus E, where C is the capital, the amount of money you put in to start the business. D is the drawing, the money taken out by the owner. R is revenue, and E is expense. So E is expanded out to this formula as what you see on the slide. So if we were to summarize it all, you have at the top the basic equation, A equal L plus E, and then below that you have the expanded equation where E is expanded out to 4 other items. So again, this is a very important slide. You need to know all your accounting components. So what are your accounting components? I'm going to circle it. Asset, liability, capital, drawing, revenue, and expense. There are 6 components that make up your accounting equation. Name, please. Name. Done. Any questions? So whatever you do, please remember this equation. Alright? A equal L plus E. E equals C minus D plus R minus E. I just truncated it to this one word. You need to know what each one means. Okay, what is A, what's L, what's E, and so on and so forth. So that's exactly what we do. So every business wants to increase the E. Alright? So capital and equity, drawing are opposites. Revenue and expenses are opposites. Capital and revenue will increase your equity. Drawing and expense will decrease your equity. And that's exactly what you see on the slide. What increases the owner's equity and what decreases the owner's equity. Okay, so if you can remember what I put on the board, then I think you're fine. So now let's look at these items here. Okay, now in your book, I have changed the last item. Okay, so please follow this. Okay, so you can see here, rent expense would decrease, revenue would increase, drawings would decrease, investment would increase. You understand what I mean? So you need to remember this. Okay, now, how do I apply this equation? I apply this equation for all the transactions. I think you guys should sit here, this side. You know, or you're shy to move that side. Alright, so we use the accounting equation to record transactions. Alright, so when I record transactions, I record them to fit the accounting equation. And we're going to show you how we do that, such that at the end of every transaction, this equation will always balance. Okay, and we're going to show you that. Okay, so accounting is all about recording transactions. So you can easily look at this slide and know which one you can record and which one you don't record. So let's look at the example. You purchase a computer. Can you record?
Yeah.
Why you can record? Because there is some value, there's some number, right? What about the next one? Discuss product design with a potential customer. Can you record it? No. Why? Because there's no number. And the last one, pay rent.
Yes.
Yes, so that's obvious. So you should know by now what you can record and what you don't record. Is this clear or not? So this is why we come to transaction analysis. So give yourself a minute, look at this slide and see how we are applying the accounting equation. You see the accounting equation at the top, and how for every transaction we make sure the account is in balance. What is the transaction? The owner started the business by investing 15,000 cash. So asset cash has gone up, so you show plus, and capital or investment has also gone up, plus. So they're both plus and plus, 15 and 15, they balance. Okay, why? Because every business to start, owner needs to put money in. Money doesn't drop from the sky, you know what I mean? He needs to put his own money to start the business. Is this clear? Alright, then the next thing is they decide to buy a computer. So where is the computer going to come from? He's going to take money out of here and put it in here. So you will see that minus 7 and plus equipment 7. Again, is balance. Next, he bought some headsets and accessories for several months, and the supplier said, okay, you can pay later. Buy now, pay later. So his supplies will go up. At the same time, he owes somebody some money. Liabilities also go up. The next one is he received cash from customers. So that's an example of revenue. Now, I want to remind you again, when you look at your slides, this is not plus, it should be minus. It's a mistake. So please fix your slide. Don't add this and say, teacher, you are wrong. I'm telling you the textbook is wrong. This is minus. Okay, it's a printing error. It's a printing mistake, so please change it, okay? And then the next one is you have an advertising bill, but you said you pay them later, so your expenses and your liabilities. Yeah, expense is always minus, revenue is always plus. Look at this. Capital and revenue is always plus, that's why it's increased. Yeah, plus, minus, minus. So please remember that. Okay, and then the next one is you perform 3,500 of services, of which you receive cash 1,500. The rest they owe you, so that's account receivable. 7, you decided to pay all these expenses. Again, all your expense is minus, cash is minus. Number 8, the transaction number 5, you decided to pay, so cash minus, accounts payable minus. Transaction 9 is you received 600 from the 2000 up here, so account receivable minus, cash plus. And then the last one is drawings. Drawing is minus, and so what you will find is this is how we can record transactions to fit the accounting equation. Okay, so I'm going to give you a minute. Please look at this and remind yourself you need to understand this so that next, after the break, we will look at how we convert this to debit and credit, how we actually record it in the journals and ledgers. But at the core, this is an extension of mathematics. Why? Because accounting was designed by a mathematician. Yeah? So this concept that has evolved since the 1400s has stood the test of time. We are still doing things the same way. Yeah, nothing much has changed, only that the concept has survived. So if you record all these transactions, now again remind yourself, owner's drawing should be minus. Likewise, it should be minus, but you can do your calculator to check that they are actually right. Okay, it's just a mistake. Okay, so this one here, take note, owner's drawing is minus and not a plus, so please change your slide later so that at the end of it all, your totals will match. A will always equal L plus E by logic. If it balances after every transaction, in total it should balance as well. It's just the logic. Understand? So what we are seeing here is transactions can affect the components within the accounting equation. Alright, and because it can affect the individual components, it doesn't mean every transaction affects every component. It doesn't say that at all. But what it says is some transaction may affect more than one component. Yeah, and some transaction may only affect one component. But the point is, there will always be two entries, a minimum of two. Yeah, there will always be a minimum of two, a plus and a plus, a minus and a minus, a plus and a minus. But it will always be equal. You understand what I mean? So this is what we call as the two sides of the equation. Must always be equal. Okay, so it is like self-checking. When you do it, you know whether you got it right or you got it wrong. You don't need to wait for the teacher to mark it. You should know. Okay? So, let's practice. We've got a simple exercise here. Let's go through this exercise. Not received it yet today. So because you're going to receive it tomorrow, it is your asset. Yeah, you're going to receive it tomorrow because somebody is going to give you the money. So it is your future asset, but you can record it today as an asset too. Account payable is the opposite. Account payable is you need to pay somebody. When? You need to pay somebody tomorrow. So you must recognize today you have to pay somebody else tomorrow, but you record it today as your liability. So what you will find, this is very interesting, what you will find, asset and liabilities are opposite. Yeah? Capital and drawing are opposites. revenue and expenses are opposite. So really, if you know A, you should know L. It's the opposite. If you know C, D is the opposite. You know R, E is the opposite. And it makes sense because A is a plus, C is plus, D is minus, R is plus, E is minus. You understand what I mean? But the reason why I say asset and liabilities are opposite is most of the time, asset will increase your cash or benefits. Liabilities do the opposite. So please try to learn them as paired opposites. Okay, then it becomes easier to understand how they work, so that after the break you will see exactly how these pairs work in action. Okay, in real life. We will stop using plus and minus because plus and minus is mathematical. We'll start to use accounting language. Accounting language which is more like debit and credit. Now I'm going to give you a few minutes. You're going to have to figure out who is your group member. I'm going to need to know who your group members are, because in the next class, we're going to do our tutorial test. Okay, so once you decide on your group, whatever you do, please don't change it. Okay, let me go and get A4 paper, and then I'm going to make the box so that you can put your names in the box. I'll give you time to decide who's in your group.
Cái gì? Tao mày chịu nhau cho gì? Bảo thông minh cho nó thoáng. Thì thoáng bao nhiêu rồi? Vâng. Có chưa? Thì nó sao? Cho nó chọn. Ba đến bốn người. Mới có 2 tay rồi, để vô. Phải chiếc thức sáng, 5 đứa rồi. Ta cũng làm hỏi cái thức xá làm bài dễ. Mày sao? Còn 2 đứa kia hả? Ơi, cao, chung lắm.
Alright, I'm giving out a paper here and I'll put a box. So in your box, you put down your group members. So each box should have minimum 3, maximum 4 names. Why? Because I will take the names here and put it on the group list on the Excel file. So whatever you do, I don't want to put the wrong names in the wrong groups. Okay, so please help me decide your group. Important is all of you are in a box. Sorry, all your names are in a box. Okay, and please don't change.
Còn 6 mày 2 thằng. Lấy 4 thằng thì nó sẽ được.
Vinh, Duy nhớ mày rồi nè. Duy nhớ mày rồi nè.
Cái gì? Rồi.
IS, owner equity statement, BS, and cash flow statement for short. Okay, so I have 4 different financial statements. Okay, they're called financial statements. So what do I have in the income statement? All my revenue and expenses. What do I have in my owner equity statement? I have my capital, drawing, and whatever is here, I transfer here. Whatever is my revenue minus my expense, I will transfer to my owner equity statement. What do I have in my balance sheet? A, L, and whatever is my E here, I will transfer to my balance sheet. And finally, in my cash flow statement, which we will cover only in the next, in a few weeks later, you'll find that we will try and explain all the inflow and the outflow of cash in the financial period. But for now, please, until your midterm exam, we just concentrate on the 3 financial statements, which are income statement, owner equity statement, and balance sheet. And from the slides, you're going to understand how they are all related. So we start with the income statement. As you can see on the slide, we give you an example of an income statement, which is all your revenues less all your expenses, and you have net income. And you will find that the net income is transferred to your owner's equity statement, just as I have shown you there. And on the next slide, you'll find my owner's equity statement. The owner's capital is transferred to the balance sheet. So if you have your slides with you, I think you need to give yourself 5 minutes to understand this slide, which is slide from your slide deck. I don't know what number it is. It's called financial statements, and this slide here to show you how they are all related. Okay, so this is very important. You need to understand how these financial statements are related. So, income statement simply means all your revenue and expense items. Remember the column which is revenue and the column which is expenses, all those will come to your income statement, and such that revenue minus expenses will be your net income. Every business wants revenue to be greater than
0.
I always want my revenue to be greater than my expenses. I always want my capital to be greater than my drawings. And I always want my asset to be greater than my liabilities. Okay, so this is the rule and the aim of every business. So R and E, this goes into the income statement, and all this here goes into my owner equity statement, and A, L, and the total of this here goes into my balance sheet. And that's exactly what you saw on the 2 earlier slides. Okay, why am I telling you this? You need to understand that all these financial statements are related to each other. So which financial statement should I prepare first? Which financial statement do I prepare first? Income statement. Why? Because the net income has to be transferred to my owner equity statement. And the last statement is obviously the balance sheet. Is this clear or not clear? So slide is showing you what to include and what not to include in your income statement. Owner's equity statement is simply explaining what are the changes in the equity account from one period to the next. And most of the time, the changes are your revenue, your expenses, and your drawings. Okay? Capital does not change. You know what I mean? You don't put capital today and tomorrow it's just thrown away. It doesn't. It stays in your book. And when E goes up, E can only go up because you put more money into the business or your business is making more money. How do you know your business is making more money? When your revenue is greater than your expenses. Okay? So this is something you need to understand. And then finally is your balance sheet, where you list out your assets and your liabilities, and it gives you a snapshot at a specific point in time. But I already told you earlier, we always want assets to be more than our liabilities. If assets is less than liabilities, means my equity is negative. Equity negative is a Nguyen situation. You understand what I mean? I don't like that. It shouldn't be. Asset must always be greater than liabilities. Okay, so you need to understand that. Statement of cash flows, ignore it for now because we have a specific topic for cash flows later. Okay, so please ignore this for now and please get started on this simple exercise to understand the financial statements. Again, there are some mistakes in your original slides, but I fixed it here. Okay, so please focus on what is here. But you need to remind yourself there's a mistake here. This one, sorry. This question here, this one is actually 17,500. I'm just going to put it in red color so that you know what the mistake is. And this one here is owner's capital. Right, so just take note of the change. I've just put it in red color here. Please update your slides when you go home, or if you can, update it here if you have them, okay? So these are the only two changes from what you see in your current slides, okay? So the question is asking you, A, determine the total assets, B, determine the net income, and C is determine the owner's equity. your attendance list. Now, I don't want you to put a tick or a cross. I want you to sign. Okay, now you sign for yourself. Don't sign for your friends, okay? Because I do count. Okay, so if I count and it doesn't match, then I know somebody is not right. I do accounting. You know what's accounting? I check.
thì cái nó không biết tiếng lo thì bây giờ cái mình thì các mình có tính kiến nó hai cái khác nhau.
Who wants to do a 2-1 and just go to?
Rồi viết cái tên em hiểu. Đâu có con gái.
Cái này giải cái gì? Đây là cái sai trước mà. Thì cái asset cash phải cộng những cái đấy là bởi vì cái này có một cái 8.000 được không?
Cái 9.000 rồi.
Những cái supplier là cái gì? Bằng bao nhiêu? 27. Còn lại là gì?
Đầu tiên là BBT nè, BBT rồi BBT là 16.000 giảm cộng cho capital là 5.000 trừ cho Robin đâu công thức lúc đầu nè, cộng trừ
Còn của bên đấy là net income.
determine the net income.
Net income nó là một
Revenue đọc lên.
Sorry, does anybody not belong to this? Okay. Do you belong to any group? You do? Okay, you do. Okay, so there's 1, there's 2. Anybody else who doesn't belong to the group here? 3. Okay, so is it okay if you guys can work together as a group? Mr. Lam? Yes. Your name, please? Please write your name here.
Revenue
là 36.000
36.000
trừ đi mượn
trừ cho mượn
là salary wage expense xin họ sẽ là
17.500
cộng với đúng không ạ? Sẽ là
Đây là 11.000. Cái gì đó?
Em là asset expand
Chơi không có.
thì nó cái gì expand thì nó cái đi
4.000. Còn cái gì nữa? Hết rồi đúng không? Rain is
OTG
rain.
expand
Rồi 5.000.
cái nút cái nút payable như thế nào là mình sẽ trả nước ngoài
Cái nào?
cái net unnot payable not tiền
Đâu à? Đâu?
ở giữa hai cái đầu ạ.
Not payable. Payable là liability đó. Không, account payable mới. Không biết luôn á. Nhưng mình bị sai rồi. Phải cộng cái lúc đầu là bị sai rồi.
Thì cái đầu tiên
Không có cái này, cái PoA đó.
total asset
Cái PoA rồi total asset.
total asset
Em coi nó bao nhiêu?
công an bao nhiêu câu đi hả
Đúng rồi. Câu sơ. Equality kìa. Gì đó? Sao ta?
thì mới biết gì
Mày mới sửa gì đó?
All right, so let's get these numbers correct. Okay, so asset is 27,000, liability is 18,500, which means equity is 8,500. Equity is also equal to capital, which is, what's your capital? Your capital is 5,000. 5,000, there is no drawing, plus 3,500, which is also 8,500. Alright, so doesn't matter which way you calculate E is the same. You understand? So again, I made a slight change here. Income statement is revenue minus expenses. The net income is transferred to your owner equity statement, and then your total E here, whatever is your E balance here, is transferred to your balance sheet. Okay, so that shows you how each of the statements are interrelated with each other. Okay, so just to summarize, the things that you should know by now is you should know that accounting is a process. You need to know that accounting is made up of many conventions or assumptions or basic principles. You need to know about the components that make up the accounting equation. You need to know how to record transactions under a transaction analysis. And we end the session with the financial statements. Yeah, meaning what? You need to know what's an income statement, what's an owner's equity statement, and what's a balance sheet. So whatever you've learned, you cannot suddenly forget. You're going to have to remember this for the rest of this short semester. All right, so we're going to take a very quick 15-minute break, and then when we come back, we're going to move on to chapter 2. Does anybody have any questions? Any questions? Is it clear? Was I clear? Is there anything that you didn't understand? Well, if you're shy to ask, please send me an email. Otherwise, I will assume you understand. So I'll see you guys in 15 minutes. Thanks.